Welcome to this explainer. If you caught our last guide, When a Simple Tracker Stops Being Enough, you already know that tracking your finances is absolutely essential. So today, we're taking the next big step, figuring out how to use the Built to Thrive Full Soul Proprietor Financials Workbook to actually make better business decisions. Let's dive in.
I want to kick things off with this core idea right here. Recording transactions is necessary, but it's definitely not the same as understanding what those numbers are telling you. Look, a lot of business owners are super diligent about keeping records. They track their activity, they hoard receipts, they update their spreadsheets religiously, but just tracking those numbers, that's really only the starting point. It's just the baseline. Without taking that next step, you aren't really gaining true visibility into your business.
So, to actually start making better decisions, we have to completely flip our mindset. We need to stop just asking, hey, did I record this? And start asking three really critical questions. What's changing? What looks healthy? And what might need a little attention? We want to see what these patterns and pressure points are revealing about the overall health of the business. Because your numbers aren't just a historical record of what happened last week, they're a real-time signal of what is happening right now.
To help you read those signals, our agenda today covers a quick 5-step framework. Separating activity from meaning, starting with the snapshot, reading your statements together, managing your GST, HST, and cash pressure, and ending with one clear decision.
Step 1. Separate activity from meaning.
So, transactions prove that something happened, sure, but they don't automatically explain whether it actually matters. Tracking activity is just your baseline data entry, like noting you spent $50 on supplies or got $1,000 from a client. Finding meaning, though, that's moving beyond passive recording to actively looking for signals. It's asking, wait, why is my supply cost trending up so much this quarter? Or why is this client suddenly taking way longer to pay? That is where the real value is hiding.
Moving right along to step 2, start with the snapshot.
Okay, so your Business Health Snapshot keeps things incredibly simple. You really don't need to dive into complex accounting right off the bat. Just look at the big categories: income, expenses, net profit, and your GST/HST position. Do some basic sanity checks. And here's a super important rule of thumb. The snapshot acts as your first-line signal. If something looks a bit off here, you don't actually fix it on the snapshot itself. You follow that signal back and fix it right in your entry sheets.
Which brings us to step 3. Read your statements together.
Here's the thing. Reading just one report, that's only giving you half the story. They're really designed to work as a pair. Your income statement answers a very specific question over a period of time. Did the business earn more than it spent? It's tracking your revenue and your expenses. But on the flip side, your financial position view, which is often called a balance sheet, looks at a specific point in time. It answers, what does the business own, what does it owe, and what is actually left for the owner? When we look at these two views together, we finally get a complete 3D picture of the business.
And understanding the difference between the two is absolutely vital. Why? Because it explains literally one of the most stressful experiences you can have as a small business owner: paper profits. You might look at your income statement, see a really healthy profit, but then you check your bank account and it's basically empty. Why does that happen? It's all about timing gaps. If you've invoiced a client but haven't actually been paid yet, well, that's profit on paper, but it is not cash flow. Profit tells you if you're successful on paper. Cash flow tells you if you can keep the lights on.
All right, step 4. GST, HST, and cash pressure.
Now, we really need to look at tax obligations way before filing time sneaks up on you. Imagine your business is like a giant funnel. When a client pays you, that money includes both your actual business revenue and the tax collected. And that tax money needs to immediately divert to a CRA trust account concept. It's not your money. You're basically just a tax collector for a minute. Making your collected GST/HST, your paid GST/HST, and your estimated net position totally visible before the pressure builds up is essential. Because honestly, the most common cash flow crisis happens when owners accidentally spend tax money on operating expenses. Segregate it immediately.
Now, a super quick but really important caveat here. Remember, this dashboard is just a planning signal. It's designed to help you manage your obligations month to month and keep your cash flow safe. But it is absolutely not a substitute for formal tax software, actual CRA filing, or, professional accounting advice when things get a bit too complex.
And finally, step 5. End with one decision.
A good review of your numbers should never, ever end in vague analysis or just leaving you feeling stressed out. It absolutely must lead to one concrete action. Taking your review and turning it into just one clear business decision reduces guesswork and makes you an active manager of your finances. You don't have to fix the whole universe at once. Maybe your decision this month is just to follow up on one specific unpaid invoice because cash is a bit tight. Maybe it's moving your collected GST into a savings account. Or maybe it's just fixing an expense you categorized wrong. Just pick one clear action item.
When you do this, you reach what we like to call the good enough state. You know you're actually using your numbers successfully when you can cycle through these 4 manageable steps on a consistent basis. You can confidently explain what changed in your business this month. You can spot where cash pressure might be building up. You're reviewing the exact same signals on a reliable rhythm, and because of all that, you're making decisions with way less guesswork.
To help support this practice and really build up your confidence, I highly recommend downloading the Financial Interpretation Prompts from the Built to Thrive resources. They'll guide your monthly review beautifully. Also, definitely keep an eye out for our next educational guide, Prepare for Year-End Before It Arrives. That one's going to help you transition these solid monthly habits into a totally stress-free tax season.
So, to wrap this up, keeping records, it's essential. You've got to do it. But turning that raw data into actual usable knowledge is where the real magic happens. Tracking numbers is just the starting point. Understanding them is what actually makes them useful. Your numbers are constantly trying to tell you a story about your business. You just need to listen to them. By embracing these 5 simple steps, you're going to find that having a structured approach not only clarifies your daily business decisions, but it massively lowers your day-to-day anxiety. Clarity reduces friction, and structure reduces stress. I'm going to leave you with this one thought to ponder for your own business. If you only looked at your numbers once a quarter, what hidden pressures are quietly building up right now that you wouldn't even see until it's too late? Start reading the signals today.